Please remember that this matter should be viewed as a solicitation to trade. Trading futures and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition. Optimus Futures LLC is not affiliated with, nor does it endorse any trading system, methodologies, newsletter, or similar service. We urge you to conduct your own due diligence. Now, here's your host, founder and CEO of Optimus Futures, Matt Zimberg.
Hi guys, it's Matt Z from Optimus Futures. We are in the studio again with Rolf and Moritz, and we're going for a second session. And today I did something special. I wrote a bunch of questions that I didn't share with them because I wanted to see their perspective on it. We're all coming from different backgrounds. And I just wanted to basically see what they think of those concepts that I wrote over here and their approach, and it would just make an interesting discussion when you have to think a little bit. So take your time, right? You don't have to, answer right away. I'll give my perspective to those things as well. So let's start with Moritz, okay? So when it comes to trading, do you believe in intuition? Let me be very specific. So, traders have a belief, I think, from the impression that I get, that some people have, that great traders have an amazing intuition about the market. Mm-hmm. Do you agree, disagree? What do you think?
I think there are definitely some people that are born with this gut feel or instinct about the markets, but most of us definitely don't have it. Not from the get-go. There's a way to train it. Like you can train your gut feel with tons of experience, definitely. The problem is, the way I see it, when I don't feel good about a trade, even though it's objectively a good trade, my gut tells me I don't like this, then if I take it anyway, I'm gonna make a lot of mistakes managing the trade because I don't feel comfortable with it. So that's where I rely most on my gut, that I don't take a trade even though it looks good technically. If I don't like it, I just don't take it because I know I will mess it up in the process. But for newer traders, definitely never trust your gut. Just follow the process and then you can learn. For example, in your journal, you could even track your gut feel. Right? You can track, this is a great setup, but I don't feel good about it. And then you can see how good your gut, your instinct is compared to your actual strategy. And then you can slowly train your instinct. Yeah. There are definitely some traders that rely only on their instincts and they make a killing, but that's probably 0.00001% of all traders. And they're outliers. And it would be arrogant to think that anyone says of themselves, I'm going to be one of those people.
Right. Well, for your perspective on intuition?
Yeah, the problem I think with intuition is that many traders use it, especially new traders. And you should say that you've been trading for 10 years almost. So in the beginning, many people use this gut feeling as an excuse to break the rules. So they might have a feeling, and then they look back, okay, I screwed up the last 3, 4, 5 trades, and then they just want to get back, and then they break their rules, and that's how they rationalize making a bad mistake. But if you are using technical analysis, which I think most traders do in these days, then gut feeling, because it's based on pattern recognition a lot. So after you have done, and after you've been trading for a few years, then I would say gut feeling can have a certain role in your trading. But if you are just starting out the first few months, weeks, even in the first 1 or 2 years, then gut feeling should not be a way to make trading decisions. Always have a checklist. And one of my favorite trading books is the one from Marty Schwartz, Pitbull Champion Trader. And he has been trading for decades. And even he, in his book, said after 30 years of trading, he still uses a checklist because we are always obviously very easy when it comes to fooling ourselves. So you need to really make sure that you are following your process, and a checklist can often help a lot.
Good point. So I agree with both of you that beginners definitely should not rely on intuition. I think that intuition in any field, there's the intuition that comes after many, many years of experience and method in everything. So I think every field out there has a certain level of intuition. It's like intuition, for example, about people. It's because all of our lives we meet people, we see how circumstances lead to something. But with children, it's very hard for us to base our intuition. We don't have it. I think traders are definitely, beginners definitely should have a method, stick to the method, not rely on intuition at all. As they develop skills in trading, cash management, risk management, at some point, and I'm talking about the years after, then, their intuition will be a completely different set of tools, right? They would actually use it based on their experience and something that I talk about, which is subconscious competence, right? Which is inside, so they learn to use that skill. But here's another thing about intuition. I think whether you are a beginner trader or you've been trading for 20 years, I think intuition does not exist looking back. That's just my opinion. Meaning that, it's very hard to go, let's say you go through 6 months of losses. And at the end of those 6 months, right, you have to say, okay, what mistakes have I done? It is extremely hard, just to sit there and think and rely on your intuition alone if you didn't follow a method. That's why I like your tool, Edgewonk, right? That's where Edgewonk, right? So you put the things in a certain format where you can go back and say, those are the patterns and those are the mistakes. So you could have intuition about trades, but it's extremely hard to go back and think about every single trade, the mistakes that you have done with intuition. So that should be completely dropped. So it doesn't surprise me that somebody like Marty Schwartz, which I think he has a house here in Boca Raton too, if I'm not mistaken. I don't know if he trades out of here now, but I know he's in Florida somewhere around here. So, so that we covered intuition. That's a little bit of a challenging question. Okay, I can go first if you want. What's the most important word in trading? Like if you had to choose one word in trading, right? You guys think about it. Maybe I'll go first. You're ready to go?
Yeah.
Go for it. Okay.
I think patience.
Okay.
But patience always, because patience is impacting our trading decisions on many different levels. For example, it's patiently waiting for a trade. That's the first one. It's patiently staying in a trade, not cutting your winner too soon. And third is being patient with your account growth, which then means how you manage your risk and how you manage your money management. And that is the thing that's the biggest challenge for many traders. You can wait for a trade every now and then, that's okay, but being patient with your account growth for the long term, that's I think where many traders have problems with. And then that's where all the problems come with the revenge trading, over leveraging. So I think patience is, if you go deeper, then patience is a very, very important word.
Yeah, for me, I agree. And for me, it's confidence. Because for me, that was the biggest step forward as a trader when I did put in the work and the hours to test my analysis of the markets, my strategy and so on, and I backtested it, and then with that came confidence. And confidence for me means everything what you just said as well, that comes with patience and trusting in your process, even though when you're in a losing streak, and trusting in your trade management process. I had huge problems with trade management in the beginning because I didn't trust my edge to play out, so I was cutting my trade short and so on. And with backtesting and forward testing, I got confidence in my strategy, in my process, in everything, and that made all the difference for me. So yeah,
that's great. So for me, and again, this is what I see day to day. I think the most important word that I would choose is size. The size of your trades, because, well, just a little bit of history, so when I started, I used to be a phone broker, right? People called in, they placed their orders, they used to pay $20, $25 per order. Most of the people did not day trade, so they were position trades, right? And then, the E-mini came, right? The E-mini S&P came somewhere around 20 years ago. It was late 90s, and everything changed. People started trading online. Now people became independent, right? So people became independent, and then, the commission started going down, and that was good for the consumer. But another thing that then, but then the competition increased even more to leverage, right? So 1 to 200, you've seen it, 1 to 100, 1 to 200, 1 to 500, right? That's where the competition grew, right? So a lot of people intuitively, and again, like we said, don't rely on intuition, but intuitively they said, well, look, I can put X amount of dollars and I can trade this much, right? But the thing is in trading is that if you don't have the right size, first of all, you never learn from your mistakes. The market doesn't move. So discipline is extremely important. Patience is important. All those factors, I don't downplay them. Cash management, risk management. But all those things cannot be done if you don't have the right size, right? Size, if you can be patient and you can be disciplined and you can have the right risk management in place, but if your size is too much, the market you don't give it flexibility, you're getting stopped out all the time, right? So I tell people, look, I think that if you have many years of experience, you can increase your size, you understand the fluctuations of the market, you understand concepts like ATR, and you can adjust it. Majority of beginners, unfortunately, don't. Although I talk to a lot of people about risk management, I think the industry overall promotes over leverage, so size is there. Okay, next question, also a little bit challenging. It's creative, but I see you guys are ready, so, I'm happy. I thought you'll sit there, maybe this, but you're like, hey, listen, we know our stuff. Okay, so what do you think is the strength in life and the weakness in trading?
Oh, that's a good one.
So what do you think, like, in life? So I'll start if you guys want to think, right? So I think that a lot of people have a certain strength in their field. I'll give you an example. Let's say my father is an engineer. He's used to thinking in systems, right? Everything has to make sense. One system leads to another, to another, to another. It's logical, right? And trading requires so much flexibility, right? So it's not always the same. The patterns are not the same. The market conditions are not the same. So here is somebody who's looking for 5 things to happen. And when I talk to, let's say, accountants, engineers, and, or programmers, I tell them, you're a programmer, you're an engineer. And they're like, how do you know? How do you know? And because the way they approach trading is in a very, very systematic manner. And I tell them they have to kind of get out of it a little bit and realize that sometimes close is close enough, right? It's never perfect. You're never going to sit there and all of a sudden it's like people who think if they have 30 indicators, right? If they have 30 indicators and the sky and heavens align with the stars and the moon, then it's the right trading, for sure it is. So I always tell people, market is a place where you need a little bit of flexibility. So that's just my perspective, right? Good? All right.
Good one. Yeah, for me,
go ahead.
What I have found for myself, one of the biggest challenges I had in trading was that I am always curious. So in real life, that is a really good thing, because once I learn or master something, not master, but I learn the basics of a new skill, I can make a plan for myself how to level up, or I can just leave it be. And I quickly lose interest once I learn the basics of a skill. And that can be, in life, it can be a very good thing, because I am very versatile with a huge skill set. But in trading, obviously, I was too curious. I was always trying to improve my strategy, always trying to find the next thing, always trying to grow. But in trading, there comes a point where the strategy itself just cannot be improved any further, or where you just have to stop looking for a new strategy and you have to stick with what you have already, and then channel that curiosity into personal growth, psychological growth, for example. That was a huge challenge for me, for sure, because once I had proven profitability with the strategy, I was like, okay, this is not interesting anymore.
Understand. That's a good point.
What I think is a challenge, and it's the way I think we've been, or the system in general works, is that most people they follow this very strict path. They go to school, they listen to what their teacher's telling them, then they graduate, then they do what they're told in university, then they do what they are told by their boss. And there's always a very straight path to what you have to do, and then you get a certain outcome. That's, I think, in trading, it's obviously very, very different when you're working for yourself, and everything that is more on this self-entrepreneurial path is where you really need to tell yourself what you're going to do. And once you only rely on yourself and you need to take responsibility for yourself, that is then where the problems come in, I think. So the way the 9-to-5 people then get into trading, I think that is where a lot of problems then come, and that's where trading becomes very, very hard, because we are not used to this way of thinking and acting.
So what you're saying is when people work 9 to 5, there's a certain set of instructions that already comes in, and they say you follow this. Yeah. And here you come, all of a sudden you have to create your own rules, right? So that's a good point.
Yeah, starting to think for yourself and taking responsibility is very important, I think.
Good point. Okay, I like where this is going. Okay, next question is much easier for you guys, so we're enough with the challenging questions. Okay, go to the easier stuff. Moritz, can you trade one method indefinitely?
You mean one strategy until the next 200 years? For the next 200 years? Well, that's... Or
it's the same method but modified somehow, Or do you really have to, put a few methods in the drawer, after a while? And when do you know when to do it,
Yeah. So there are definitely some strategies, because I've been dabbling into algorithmic trading as well. I know that the shelf life of algorithmic trading strategies is much shorter than that of systematic discretionary strategies, simply because they are much more rigid in their rule set, and they're basically, most of the algorithmic strategies are curve fitted, even not to the point that they are not profitable, but they are very, very tightly fitted to a certain market condition, and if the market changes just a little bit, that can already ruin the whole strategy. So for algorithmic traders, definitely you have to develop strategies all the time and change them in your portfolio, pull out the old ones. There are certain ways to do that. Basically, maybe if your equity curve goes below the Bollinger Bands, for example, you apply an indicator to your equity curve, you stop trading when it drops below the Bollinger Band, the outer Bollinger Band. For discretionary trading, I know a few traders that have traded the same methodology for the last 20 years successfully, and that is mostly because I think, firstly, of course, their strategies are not based on I have to sell when indicator goes above certain level. So they are not playing an indicator game. Most of them, they are more adaptive to the market with their price action analysis and so on. And I'm pretty sure that the way the markets move right now, they are still going to move in the next 40 to 50 years. So I'm pretty confident that I can trade my strategies until I retire. I mean, never say never, but I'm pretty confident.
That's good. It's a very good point. I didn't think about it. Shelf life of automation versus discretion, right? Yeah. It seems like, and I would agree that automation, would have a shorter lifespan than...
Definitely.
Yeah. Good point.
Yeah, I would say the less rigid your strategy in general, the more adaptive obviously it is, and the better you can adapt to what is happening in the market. So a system that I think is very limited, or it works well in certain conditions and it doesn't work in others, when I say, okay, this is my entry, and then every time I take 20%, 20 pip stop and a 50% pip target. If you don't have any flexibility in those rules, then you will run into problems very quickly. Sometimes the market just moves a lot and it will easily hit your target and stop. Probably first you stop and then you're out. And other times when the market doesn't move as much, then it will just hover around your entry point. So being able to adjust to market movements probably is, for the more adaptive it is, the better, the longer you can use your strategy.
Good points. I think that, every strategy, well, I shouldn't say every strategy. I think some strategies have good structure, their base their DNA initially is good, right? I think it's up to the trader to use that and adjust it according to market conditions. This is what I think messes up a lot of people, right? You can't always use the same targets. You can't always use the same stop loss. And because in very volatile environments, you must squeeze more from profits because you'll give more on the stop losses or you'll get stopped out, very, very frequently. So you can have good risk management in place. You can have good entry in place. But you also have the ability to recognize the environment that you're in. So you could have, as they say, something could have good bones, but it's up to you then to recognize, okay, this method, I like in the first one, video that we did here together, you're talking about that you have 5 methods. I believe in that, very much, that you can adjust different methods to different times. So I'm sure the bones of the system initially, the DNA or the structure is good and everything adjusts according to the market condition. So very good. Okay. This would be a little bit of interesting questions. So what should traders do outside of trading to help them with trading, right? So, what do you think, anything, what do you think they should do?
For me, trading is a lifestyle, mostly. I mean, that's just how I see it. So everything I do outside of trading feeds into my performance, everything. And that's just how I perceive it, because as we said last time, it's a performance sport. So what I eat, what I do how I sleep, who I talk to, how I react to people, do they make me angry, what news I read, and so on. All of that feeds into my performance as a systematic discretionary trader, 100%. So for me, the most important thing is obviously, healthy body helps. It's not a must. Like, you don't have to run a marathon or eat vegetables every day, just so that you feel comfortable with yourself. That's 100% super important. And also that you are psychologically in a good mindset, that when you sit down, and that's what I usually do when I sit down at the table, I check myself. I do this self-check from meditation, and I try to measure how focused I am. And sometimes there's just a barrier and I cannot get through it, and then I won't trade because maybe events from the day before worked me up too much. And so when it comes down to things outside of trading, for me, most important is mental hygiene. Basically, meditation helps a lot. And what I also do is running, because it helps me clear my mind.
I really like your approach, because you know what? I never thought about the exposure that you have with people and your environment and how it affects your trading. So, if you're in an environment where you're angry or people irritate you all the time, it's obviously going to maybe lead to bad decision making and everything else that you do, not just in trading. So that's a really good point. Body, mind, of course, for it, but also exposure, limit yourself to good people, right?
Yes.
Not jackasses, we irritate you all day.
Yeah.
Got it.
So I'm probably very German when it comes to this, but for me, discipline is very, very important. And people always ask me, how do you get more disciplined as a trader? And then I always tell them it's like a muscle. You cannot just suddenly switch it on when you're in front of your charts. You have to develop discipline and build discipline away from the charts as well. So if you are very undisciplined during the day, then it's most likely that you're not going to be disciplined when you sit in front of your charts. So just doing the things you say you will do and keeping the promises that you make to yourself, this is already a very, very first good step. If you say, okay, I'm going to do this tomorrow, then just go and do it. Don't say, I'll do it tomorrow, and this will feed back into your trading as well. When you know, okay, I should do my market preparation, I should do my journaling, but I will watch Netflix first. Then it's just a cycle, and if you build discipline, everything will become much easier.
Now that's an interesting approach, because for me, I see discipline like a muscle, and if it gets sore, I cannot use it anymore. So what I usually do is I'm super disciplined in my trading, but outside of trading, I'm quite lax with what my daily routine and so on. I try to be as undisciplined as possible. And when it comes to trading, 100%, because that's how I do it.
No, I'm completely opposite.
Yeah, that shows you have to know yourself very well as a trader.
Yeah, look, whatever helps you to get there. I think Rolf's point, I think many people, I understand this point because what I tell traders all the time, and again, just from interaction with them, I ask them, what do you do after you trade? Like, what do you do? Like, do you go on the couch and you eat a bag of chips? Or do you read a book? Or what do you do, right? Because your day doesn't end just there. It starts before you trade and it goes afterwards. I like your approach, where you say, look, I'm going to expose myself to an environment that is supportive of my mindset, right? You're saying, look, I have to develop those habits, because they will be in trading, right? Yeah. If I procrastinate everything, first Netflix, first I'll take the wife to the mall, anything challenging, I can't do that, I have to take the dog out, right? But instead of forcing yourself to do the hard, what you don't want to do, what doesn't come out to you naturally, because in the end, that's where the discipline gets developed.
And another thing in this context, it doesn't mean that all your days just you force yourself from one thing you don't like to do to another. So I always like to structure in or put in nice things that really make me fun, really are fun around the things that I don't like or I have to do. And so, for example, Saturday is like my market preparation day when the market is closed. I know, okay, I'm going to get up, get my dog out, and then I will sit down for 3-4 hours every Saturday morning, do my market preparation. Of course, I could imagine nicer things doing on a Sunday morning, but I know afterwards I'll go to the gym, to the spa, whatever, and that is always my little reward. So that is how you can actually create a life or some things to then look forward to. It's not just one thing after the next where you have to force yourself. So you can actually build a life that you enjoy around the things that you should be doing.
No. You reward yourself, basically.
Yeah.
That's a good concept.
I truly believe in reward. Like you have to, if you had, I think it trains the brain muscles to actually repeat success.
Yeah.
So if you had a good trading day, go buy yourself a shirt, do something to reward yourself. You're actually teaching them, because I tell people, here's the interesting part. So when people are not successful, or people did not have a good trading day, they would write pages and pages and pages and pages. And when they had a good day, that's when they hit the couch. Watch TV, great day, I know what I'm doing.
Yeah, I agree.
But what they're actually, the damage that they're doing to their brain is, sometimes the brain does not distinguish between reality and between imagination.
Mm-hmm.
It's been proven over and over. So when you sit there and you write all your failures, this is what you're getting your mind used to.
Mm-hmm.
Your mindset is just focuses on that all the time instead of sitting there and writing and analyzing everything that you've done well, because you teach your brain to success, and that's in every field.
Yeah.
What I do outside of trading, I really try to read as much as I can to keep me sharp. I love variety of books. Not only about trading, but industry, people who write about human behavior, psychology, success. And I really see, at the end of the day, that people, whether it's trading or any other field, success has so many common traits. Success, what I see is boring. It's repeating the same thing over and over and over again. Most people get into trading because they want to have an exciting life. When most of the time they have to sit like this and wait for a pattern to finally come. It's just like, So it's interesting that I find all those things, and that keeps me motivated in the business, and also motivate our traders, to share with them, what successful and analytical people do. Cool. All right, let's go to the next question. All right, we have 3 more. Okay, so we spoke about methods before. Do you think a method can work across all assets? Do you think a person, and the reason that I'm asking you this question, I'm interested in your opinion. We have customers who, for example, come from stocks to futures, or, they come from Forex to futures, or maybe some of them will move from, from Forex to futures. So do you think that a method, maybe I'll start with you, Rolf, because I'm getting Moritz here. Do you think a method is transferable? And if it's not, what should they do?
Yeah. So first of all, I think it's, as I said before, the less rigid, obviously, the more it can adapt to the different types of a market. And for me personally, what I think and what helps me in my process is when I have a strategy, and I can apply it to, and I trade Forex mostly for myself. So I follow all the Forex pairs, but I don't trade the same pairs every week. So I have a very big I'm very big on market selection. So I scan the market and I look for certain ways. How does a market move? And I'm a technical trader, so I look for markets that respect technicals, that are clean, nice, good to read, because then obviously what happens in the past is not a guarantee that will happen again in the future, but it gives you a good idea of, okay, this market has been moving nicely. I expect with a reasonable probability that it's going to keep on moving nicely. But then there are periods where certain pairs, certain markets are just not adhering to technical principles at all. They're too volatile. There's no volatility at all. It's just flat and dead. And then I will sort out those markets for the next few days. And once it gets back to normal behavior, then I will go back and apply my strategy again there as well. But you need to know under which market conditions your system works best. And then I think you can trade different markets as well. I trade my same method that I use for Forex. I trade on CFDs, on indices, but not always the same markets every week, always when the situation is right, I think.
Yeah. What I would add is that if you are a day trader, you're probably very specialized. So you are a strategy specialist and you're a market specialist. So that's very, you're not a strategy, you're a market specialist. So you're very specialized on one market, maybe trading the euro dollar every day. And probably if you use that same approach on the GBP JPY or a futures asset, it's probably not going to work. Or if you are a stock day trader that uses trade ideas or another tool for scanning and so on. But if you are on a higher time frame and you're on the monthly, weekly, daily charts, swing trading, then what I usually do, so if I trade stocks with my methodology, I have a certain scanning process, then I look at the stocks, because I don't trade exclusively Forex, then when I find a chart, I look at the chart first and see how well respected are the methods that I use on that asset. How well respected are the moving averages that I use in my strategies? How well respected are support resistance levels and so on? How is the market moving in general? And if I feel or assess that market moves in a way that is fit to my strategy, I will trade it. And sometimes a market will not respect the things that I use for technical analysis at all, and then it's just not going to work. So
good points.
Yeah.
So obviously the less rigid system has to be flexible, then you can adjust it.
Yeah.
Obviously time frame. The only thing I would add to that is that when people move from one asset class to another or within the same asset class, I think what they have to think about how much leverage they used in the previous asset class. So, a guy would have $100,000 in his, in his stock account, the most, I think the leverage is maybe 50%, right? But then they go to futures, right? They open accounts with 10, 15,000 and the contract size is 150,000. So now they have 10,000. So they traded stocks before, they have a nice method. But now, it's a completely different story, trading it on much smaller funds, right? So obviously that would make, a difference. Did you want to add something?
No.
Okay. So let's start with you again, Rolf. Okay, so what's the biggest mistake that you commit when you started trading?
Without a doubt, system hopping. And that's why I think now I'm so big on discipline and routine and not being all over the place. What many traders do is obviously they take a trade, then it fails, and then they look at, okay, what could I have done differently on this trade that would have made me money then? And then they will change their approach on a trade-to-trade basis. And then obviously you look back on your trading results and you cannot analyze them because every trade is based on a different premise. And then you cannot find similarities because, well, in the end, every trade is completely random. And system hopping, I know it's hard to overcome, especially when you stop system hopping, when you just say, okay, I'm going to trade this system. Then obviously in the beginning you won't have suddenly great results. It will be a gradual process how you can build up your expertise, how you get an understanding for the system that you trade, you learn to adapt it, and those are usually when you not make money in the beginning. So it's a balancing act of just staying patient and being in there for the long game. But just like in any other skill, and you need to always remember that trading is a skill. You would not go out there, pick up a ball, and then expect to play very, very good ball. But in trading, people forget it because it seems so easy. You can buy it and you can sell, and then that's it. And but in the end, it's a skill that you need to learn.
Yeah. No, I pretty much made every mistake possible, but I only made all of them once.
That's good.
Like over leveraging, and because I was so excited when I came from poker to trading because there was leverage, and no matter how big my trading account was, the game would always stay the same. Like in poker, if you move up in stakes, obviously the people you play against they will be much better, and so on. And in trading, I was just so hyped and excited that I martingaled, I traded without a stop loss, all that stuff. But I did everything only once, and then I went back to being smart again.
Understood. Well, one of the biggest mistakes that I've done in trading it was specifically in the futures arena. So, people look for different futures to trade, right? And obviously everyone is attracted to the E-mini S&P because it's really the most liquid, right? That's what they want to trade. This is where more discussions go. And obviously everybody wants to master that specific contract. Not realizing that there's other contracts that you can trade. You have the 10-year notes, you have the crude oil, you have the gold. Each one of them, I can't say that they have less risk, right? Because each one of them could experience once in a while certain volatility that you haven't seen before. But there was always this prestige to be an E-mini S&P trader. And today I tell people, listen, you can trade corn. You can trade pork bellies, lean hogs. It doesn't matter. It's just numbers that are moving. That's all it is. It's just a bunch of things that are moving on the chart. And if you're comfortable with that, that's what you're comfortable with, right? Like, you don't have to go to a party and tell people specialize in lean hogs. Just tell them that you're a trader, right? Like, I never tell people that I'm a commodity broker because it doesn't matter. They still keep on asking me, what do you think about Google, right? Do you think it's worth buying it? It's like, okay, fine, So I invented every profession in the world. But anyway, what I tell people all the time, you shouldn't get fascinated also as far as, with certain asset class, right? You can't say, I want to trade stocks over futures or futures over forex. Some things will come naturally to you and you'll be comfortable with them and that's what you choose. And in the end, it's a business because that's where you make your money, right? So anyway. Yeah. Okay, this is the last question, positive question. Go to Moritz again. What do you think is the best thing that you have done or what you have realized, when you started trading?
The best thing I have realized, you mean?
Well, like sometimes you have the worst things that you've done. What's the best thing that you have done?
All right, that was definitely starting my journal
okay.
and developing it, because I was always a numbers guy, but I just never knew it. I was horrible in math in high school, and I was just really bad with numbers. But I developed this love for statistics and so on as I was growing up, but it was unbeknownst to me. And then when I started looking at Excel and I started looking at various statistics and going deeper into my strategy, that's where suddenly that spark came, and I was so excited, and it was just over a spreadsheet. It was hilarious. But that was definitely the best thing I ever did in trading, because it helped me become profitable, build the life I'm having right now, and I'm in a great spot right now. We both are, and it's just, that was definitely the one thing.
That's good. Epic. That's good.
For me, it's market preparation. The watch list, what I do on the weekends, as I said, because it forces you to really get to know your system a lot. Because, well, what most people do is they take the weekend off, they come Monday morning, turn on the computer, and they just start trading, hunting for setups. They don't really know what they're looking for, they don't know what to expect, they don't know, okay, what did I do last week? But if you really take the time on the weekend when the market is closed, and before I do my process, what I do is I replay the week before. There's certain tools you can use for free as well. And you just look, okay, what happened last week? And then you can say, okay, this is how the week behaved, this is what the market did last week, this is what I did, maybe I should have done something differently. You ask yourself, was this reasonable, or is this reasonable without the hindsight bias? And then you can plan for the next week. And you need to ask yourself, actually, when you do this, what is it actually that I'm trading? What are the rules that I use? How do I apply my strategy? What are the different components of my strategy? And once you have this, then you have confidence in your system, but also in yourself. And that is, I think, like self-respect is actually a very, very important thing. Many people don't have that, but if you really put in the time, and maybe that's very personal and very German of me again, that I'm You're
methodical. It's not very German. You're very methodical.
Very methodical. But self-respect and knowing that you actually put in the time and you put in the work and you do your best, that is what helps me a lot. Yeah.
Well, because you guys have very organized backgrounds. You know, you come from areas that required preparation prior to doing things. So it was already in your DNA. So, you know, which is a really good thing. So you didn't approach it, well, I'll see how it goes. We'll see if it will work out. You know, it's like, I sometimes don't understand this approach. Like when people sometimes say, yeah, I'll try this day trading thing. Maybe you're going to try, you know, like how is anything working out if you're going to try any business? But I'll tell you, you know, I can't say it's the best thing that I've ever done. But when I started trading, it's a conclusion that I made, which is true until today. What I realized at the time, that there are no mistakes that are very individual. I've realized that people who lost money in trading all make the same mistakes. Now, they could describe it differently. Yeah. They've applied it differently, but it's always the same mistake. It's like you said, it's over leverage, lack of preparation, you know, not reviewing your trades, going all in, revenge trading. You know, it's like they're all doing the same thing over and over and over again. Yeah. So I realized that our DNA, you know, intuitively is not meant for the market. And I was like thinking to myself, okay, well, why? You know, why can't we guess direction of the market? Like, why can you when you play poker, you can sit with 6 people and after an hour you can pretty much figure them out. Yeah. Because you're playing with so many players, right? So I tell people about day trading, for example. Like imagine a field with 1,000 people. And I'm asking you, do you think those people have the digits 0 or 1 in their head? You know, just tell me if this field, you know, is it 0 or 1? So you say, okay, well, let me try and figure it out. Let me see their profile. Let me see, you know, how they think, what they think, and then you have an estimation. I said, great. Now I tell them how hard it is in day trading. Now tell me they think 0 or 1 every 30 seconds. Yeah. Every 30 seconds tell me how each person's, whether they think binary 0 or 1. It's very hard to assess. So I realize when people approach anything statistical and requires prediction, but I realize they suck at it. You know, horribly. We sucked at predicting Donald Trump coming to election without getting politics, right? But nobody anticipated it. Nobody anticipated Brexit, right? So all those prediction models that you have that are working out there actually are not working, and that's with a lot of statistics and math. So I said to myself, okay, as an individual, how can you predict, right? So you can't. You got to have a method. You got to have discipline. I also realized that trading, you know, I'm actually learning it more and more, and I appreciate it more and more because of poker. It's the variance factor, right? How you can actually have 10 bad trades. You can have 20 bad trades. You can't get depressed over it. You know, you can't depress it. It's not a representation of your skills. It's just a representation that you could do everything right. So I've realized that, you know, success in trading is everything else outside of it. It's not, you know, it becomes a byproduct of it's not a goal in itself. Success in the market is a byproduct of success in every other thing, right? It's success in discipline, success in preparation, success in method, success in everything else, which lead, potentially, I should say, because I'm a licensed broker, could potentially lead, right, to profitable trading, because even then. So that's what I realized before I approached it. The second thing, the one mistake that I've done in trading that I didn't realize is that I thought that automation requires less discipline than discretionary trading. And people they like discipline in trading, and they say, if I was only to automate it. And I was like, if you're not, first of all, here's the interesting part. If you're not the programmer behind your trading, then you'll start doubting.
Yeah.
Was it programmed right? Because it's not you who did it. And the second thing is, most programmers who are given formulas, many of them are not traders. And they add their own flavor, right? They cannot, it's like a language. They cannot not add their own flavor, because you're asking somebody to translate, right? You can ask a guy to translate something from English to German, and I'm sure that 5 people will have a completely different, now it will be close, right? But in trading, you can't be like that. One rule can throw it all off. So anyway, that's the mistake that I've done. Those are the conclusions I've made. And I'm still learning, right? We're all still learning about trading, right? Nobody, there's a mistake about amateurs that, well, I shouldn't say amateurs, but beginners, let's say, and amateurs. They think that they can, actually, people wake up in the morning and say, I know the market. Every single trader that I know that made it as a trader always says, I'm still learning. Market evolves, things change. But the amateurs say, there is a way.
Yeah.
There is a way, that you can actually, that people do know the market, right?
It's always like people say, okay, how long does it take until I'm profitable? Because they think, okay, once I get there, then that's it forever. But as the quote says, you're only as good as your last trade. So you always have to keep improving. The market always changes. New technologies come, volatility and everything changes. So you need to be, you need to have always, just need to adapt.
Improve all the time.
Right.
You need to be an advanced student of the markets. And what you said about the general principles that you can follow, that's so true, because, for example, in poker, I knew a guy who was a dealer. He was dealing cards.
Right.
And he did that for 3 years. He never played a single hand himself, but he observed the people on the table, what they were doing wrong. And they were doing all the same time, all the same mistakes every night. And he watched them. And then after 3 years, he said, okay, I saved enough money now, I have a bankroll, I'm going full-time poker. I told him, are you insane? You never played a single hand before yourself? You're like, yeah, but I know what I'm doing. And obviously he wasn't a profitable player right from the get-go, but he was much better than anyone ever that's just started out. So those general principles you can follow to basically reach at least break-even phase quickly, those are super important. And that's also why I think it's important to get a teacher, a mentor, so you don't do anything, because when mistakes creep in from the beginning into your process, it's also really hard to unlearn them once they are inside there. So
that's actually, that's a little bit the position that I'm in, like a dealer, right? We have accounts coming in. I don't judge people, because I know trading is hard, but I know some people who are more successful, less successful. I see, I don't follow them individually, but I see patterns when I talk to people, and I see the patterns are becoming absolutely the same. So the dealer had access to data. When you have access to data, you're starting to make observations about the data. And you're seeing some patterns are just repeating themselves. You're like, this is a no-brainer, right? Everybody gets excited with this hand, everybody all of a sudden underestimating this hand, right? All of a sudden, intuitively, you start saying, well, this hand is really good. They always win with that hand, right? And otherwise, it wouldn't come to you, right? So.
But then it's, again, what we talked in the first video about being conscious about what you're actually doing. When you are trading and when you are the one trading, then it's so easy to just get lost and all the emotions take over. And then if you don't spend the time to look back, then you won't find those things. But if you are, and that's really nice when on the weekend, take 5, 10, 20 minutes, look just back at what you did last week. And then you will be also in a position where you are the observer, and then you can make much better adjustments or decisions there.
Yeah.
Good points.
Yeah.
Well, you guys build a great tool. Obviously, this is what they should use. They're enjoying all this free publicity I'm giving them, but they well deserved because they really build. I love people who really build things to help traders. Truth to be said, you were talking about mentors. I know that the industry, when I started out as a broker, there was maybe one educator for 1,000 brokers. Now there's 1,000 educators on YouTube. Everybody's a guru. And when people approach something, I think people are good in their nature, right? And they believe that if somebody puts, videos out there and, promotes is good, but a lot of them have theoretical knowledge. They don't have the base to bring them to where they are. Those people never traded, never had skin in the game. So our industry is just kind of saturated with all that. But when I see something like Edgewonk, I love it because I really think it helps traders. I mean, it doesn't tell you what to buy, it doesn't tell you what to sell, but it allows you to recognize yourself, your strengths, your weaknesses, objective way, and all you have to do is 15 minutes, just upload your trades. Go in, upload your trades. Every day, this is what you do, and sit and see what you've done. You might come up with patterns that you recognize that your most profitable trades, because you trade all day, so people click, right? And then you say, well, hold on, just 1 second. My best trades are from 11:30 to 12:30, right?
Yep.
Maybe that's what I should do.
Yeah.
Maybe in the morning I didn't have enough coffee yet, right? Maybe I didn't get a good night's sleep. This is maybe the best time. And then you keep on doing that, and all of a sudden this pattern breaks, and you realize your best trades are all of a sudden towards the close. Something happens at the 3 o'clock, at the mini S&P, buying, selling, right? So it's a great tool. I think it took a lot of, honestly, being as young as you are, I think it took a lot of courage to actually come and build this and saying, you know what, the industry needs it. Because we are saturated with everything, and there are trading journals out there, and they existed before, but I think what you guys did with Edgewonk, not only from an analytical standpoint, but I think visually, it's incredible, honestly. It's just pleasing. You open it's like, wow. It's not, there are obviously competitors, and I think some of them are, worth saying that they're good, but they don't, nobody put the thought into the visual interface. And I think for me, this is individually for me, I don't know for others, it's important to have a modern interface, right?
Yeah.
So since you revealed it, soon it's going to be on the web, so you guys will be able to do it. So check out Edgewonk. Rolf, Moritz, thank you for your time. Guys, thank you. Listen, always, I hope you'll come many flights from Frankfurt to Miami, right?
Definitely.
You're going to be in the frequent flyer now. And that's it. Until next time, and please press the like button. Put all the comments you want underneath. We'll try and respond.
And we'll monitor them. If you have any questions, we will come and answer all the questions.
Please, yes. So that's a very good point. You can always interact with them. Guys, thank you, and until next time. Have a good one. Bye.
Please remember that this matter should be viewed as a solicitation to trade. Trading futures and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition. Optimus Futures LLC is not affiliated with, nor does it endorse any trading system, methodologies, newsletter, or similar service. We urge you to conduct your own due diligence.